We've been getting so many questions lately about one topic, and that is, what are you two going to do for health insurance? And honestly, I think the bigger question behind that is health insurance even affordable for early retirement? So today, I want to share everything we have learned so far and walk you through the plan that we expect to choose for 2026. Now, this is the exact breakdown I wish we had when we first started researching all of it. Now, some of you have been incredibly supportive and curious, and then a few comments have been borderline hostile. For whatever reason, health insurance, especially the ACA, really gets people's blood flowing or boiling. So in this video, we are going to talk about what early retirees really need to know, how ACA premiums are calculated, what plans cost here in Nebraska, and the plan that we expect to choose. Now, if you're thinking about early retirement yourself, or if you've wondered how people bridge the gap before Medicare, I think this video will help you out a lot. For many years, we've had good, solid employer insurance. It's been practical and easy to understand, and honestly, something we didn't have to think much about. It quietly covered our checkups and gave us a peace of mind. But that coverage won't last forever. And part of early retirement is taking responsibility for the things that we once handled automatically through our employer. Now, health insurance is one of the biggest pieces of that. So over the past few weeks, we have been looking at all the health insurance options available to us, not just ACA. We looked at private health insurance, short-term medical plans, and even COBRA. But once we compared the costs and the coverage, it became clear that those options didn't make sense for us financially or even medically. That helped us narrow our focus to the ACA marketplace as the most realistic and affordable option for us. From there, we started digging a little deeper. We started comparing the plans, running the income scenarios, and learning how the tax credits actually work. We wanted to understand what our future monthly costs might look like, what coverage we would get, and what we would realistically use. And instead of waiting until the last minute, we'd rather be fully prepared. We logged into healthcare.gov and Health Sherpa. We started with just the basics: the monthly premiums, deductibles, out-of-pocket maximums, pharmacy coverage, and the overall benefits for each plan. But the part that people misunderstood the most, and the part that gets the most heated comments, is this. The ACA premiums are based solely on taxable income, not your net worth. So you could have a lot saved for retirement, but if our taxable income is low, then the ACA premiums can still be very affordable. And the reverse is also true. For someone with a modest savings but high taxable income will pay much more. So the ACA uses your modified adjusted gross income to determine whether you qualify for tax credit, the size of the credit, and what you ultimately pay each month. So here is the simple version of the subsidy math. The ACA decides what a reasonable percentage of your income is. This is based on where your income falls compared to the federal poverty level. So everyone pays a percentage of their income, not a flat dollar amount. And then the benchmark plan sets the price. This is the second cheapest silver plan in your area. The subsidy is based off that price, not the plan that you're picking. So your subsidy equals the benchmark plan price minus your required percentage. Whatever is left becomes your premium tax credits. And you can apply your subsidy to any plan, whether it's the bronze, silver, or gold. This answered the biggest question that we had going in. Yes, health insurance can be affordable for early retirement if you understand the income rules. Now, there could be some changes to this because right now, ACA plans include enhanced subsidies that were expanded and extended over the past few years. Now, these made premiums significantly more affordable for a lot of people, including early retirees. But these enhanced subsidies are not guaranteed for every year. If they are extended again, 2026 pricing will look similar to today. If they expire or change, premiums could rise, not because insurance got worse, but because the subsidy math has changed. So when we saw a premium of $366 per month, we knew that might raise to $450 or $500 by the time we applied in 2026. And being flexible is part of our plan. Here's what stood out when we compared ACA options for Nebraska. These are general ranges for a couple of our ages. The Bronze plan is $180 to $350 per month, deductibles usually about $7,000 to $9,000 per person, and it works best for people who almost never use medical care. And then there's the Silver plan, which we feel like might be our best fit. It's $350 to $700 per month. The deductibles are generally $4,000 to $6,500 per person. And that is a balanced mix of cost and coverage, eligible for cost-sharing reductions, and best for people with low or moderate medical needs. And then you have the Gold plan, and that is $600 to $900 plus per month. So those deductibles usually are $1,500 to $3,500 per person. It has really good coverage, but the jump in premium wasn't worth it for us. For early retirees like us who use routine care, preventative appointments, and a couple of basic prescriptions, Silver made the most sense for us. Based on what we saw during open enrollment, the plan that fits us best is the Blue Cross Blue Shield of Nebraska Silver plan. So when we looked earlier, that premium came out to be $366 per month for the both of us. But here is our timeline, and this is going to change our overall costs for the full year of 2026 for health coverage. We will be traveling in the Caribbean for nearly 3 months. We plan to apply for our ACA in February of 2026, and then we want that coverage to begin on April 1st. So the reason why we are doing this is because while we're out of the country, they do not accept our health care plans. So we didn't see a reason to pay for it if we're not able to use it. Because we're enrolling later, that 366 number is just an estimate. When we pre-price it in early 2026, it might be closer to $450 or $500 per month, depending on updated pricing and whether those enhanced subsidies continue. And that's okay. We have built that flexibility into our retirement budget. This topic brings out strong opinions online, so I want to keep this simple and respectful. We have seen comments like, if you've saved money, you shouldn't be using the ACA, or you're taking benefits from people who need it. And I understand why healthcare brings out emotions. It's because it affects all of us. But here's the truth. We have paid taxes into this system our entire working lives, just like everyone else. The ACA isn't exclusive. It was designed so that anyone can use it if their income fits the guidelines. We're not taking anything from anyone, and we're not bending any rules. We're simply using the marketplace exactly the way it was intended, especially for people transitioning into early retirement. And honestly, we're grateful the option exists. One thing that early retirees need to plan carefully for is their taxable income. Because the ACA is income-based, things like a large IRA withdrawal or a big Roth conversion or an unexpected taxable event can raise premiums. So we are intentional with our withdrawals and our conversions so that they fit our long-term tax plan. It's not about avoiding taxes, it's about spreading them out intelligently over time. So this keeps our ACA premiums predictable and manageable until Medicare. So here is where we stand heading into 2026. We are going with the Silver ACA plan through Blue Cross Blue Shield of Nebraska. It is estimated at $366 to $500 per month for the two of us. We will be applying in February of 2026, and our coverage will start in April 1st as we are traveling out of the country for the first part of the year. And to answer that big question, Yes, health insurance can be affordable for early retirement. It takes understanding income rules, how subsidies work, and staying flexible. So this plan fits our needs, fits our budget, and gives us a peace of mind as we transition into our next chapter. And if things shift a bit, we'll adapt. It'll be okay. Now, if you want more videos on ACA planning, early retirement strategies, Roth conversions, or even updates when we actually apply, let me know in the comments below. Thanks for watching, and we'll see you in the next one.